Okay, it's 9 o'clock. We call the meeting to order, please. Deborah, roll call.
Certainly. Ring,
Here.
Lau. Here. Byram.
Here.
Castillo. Here. Singh.
Here.
Star. Here. And Hurd.
Here.
Next is the minutes from the March 25th, 2025 regular meeting. Any additions or changes? Seeing none, they're approved. Residence forum, Deborah, anything?
Anyone here wishing to speak? I don't have anything and there's no one over Zoom. That concludes the residence forum.
All right, Chair report next, just a quick note that this will be Adrian's last meeting on this side of the table. Next month, we'll have to move to the outer chairs.
Wow.
Congratulations.
I do want to thank him for his years of service on the Finance Committee and wish him good luck as he moves on to the GRF board.
Thank you. Congratulations on your election.
Adrian, I'm gonna miss you because I just really appreciate your way of distilling information, complex information and simplifying it. You've really been a
So
help.
then you can't have an honorary chair here?
Yeah, it's like,
Emeritus?
please don't go too far.
He's just gonna be right behind you, Nancy. Next is the,
Hello.
Anybody with their speakers on while logged in? No.
Wait, hold on. I got it.
Okay.
Guilty as charged.
Next is the general manager report, Jeff.
Good morning, everybody. I'd like to echo the thanks to Adrian for many years on this committee and the guidance and turns as chair and a valuable insight in addition to the community. So thank you and look forward to having you on the GRF board. One thing I just want to talk about, we had a really good presentation at planning with Kelsey Klima presenting about the future of transit and some of the studies that we're been engaged in and working towards some revisions to that service. It is going to be kind of an ongoing thing. We'll probably be before this committee at some point talking about equipment, as that will be a capital purchase. We're looking at going down to a smaller van type service that is more nimble and can go in and out of entries, and also with a software service that could route vehicles and provide trips and give people access to an app and a lot of different things that will be coming. And then another component that involves like the Lyft concierge service. There's quite a few different things involved, but there is progress being made, and we'll continue that discussion at planning. Then again, it will hit this committee at some point in the near future. We do have a lot going on. I'll defer to Ann when she gets to her part in regards to solar and pickleball and the food and beverage study. Those are all making significant progress. We are also working on a financial piece for this committee and for the board in relation to the medical center and the property at 1220 MOD and this facility here. All of how that plays is somewhat dependent on each other. So we'll be presenting that here in the coming months as well. So lots of good stuff happening.
Okay. Next is Todd, financial status report.
So we're gonna start by having some, so it's a positive start to the meeting. So as everyone in this room knows, obviously our priority was to get the so our priority was to get this one of the initial mutual financials out, which we did get Q1 budget to actual Q1 numbers out to all the mutuals. Obviously, we're going to continue to refine the reporting, and it's the first snapshot from NetSuite. But they're directionally correct, and we're going to continue to refine those. And we know there's a couple things that still need to be added to them. But we got those out, and so obviously shifting into the GRF side, you know, was always the next priority was to get year-end closed in GenArc for GRF and MOD. We did have the addition last month of Kat to my team, so just so everyone remembers, we lost Bridget, who was a senior accountant in that role last really October. So even though we did pause on getting financial, some of that was also due to the fact we just didn't have the staffing as well to keep focused on it with Amanda so engaged in the NetSuite conversion. So we do now have, we're now fully staffed in my department. I will be doing a deep dive for the board meeting this month on Thursday to kind of show you who my team is and some of the changes. So I encourage everyone here, if you know, have an opportunity to watch that. It will be, the presentation will be posted after it. So if you miss it, it will be available. But with Kat's addition, you know, a lot of the catch-up stuff we need to do on the GRF side is now all happening. She's just been a great hire. She's already pretty much at the ground running with not near as much of Amanda's time as needed. So, so let's get into some of the overall results. Let me make this a little bit bigger. All right, so on the GRF side, we did end with a favorable surplus for the year. Obviously, that will certainly have, it is still obviously an audit and preliminary, and as we move through with the audit this year, you know, if there were some accruals and stuff, that number can change. And as I mentioned at the board meeting and also during the budget session, one of the things that we really need to do as a finance committee also is making sure that once that final audit is completed, it's when we actually go back and truly look at whether or not there's a realizable surplus there that can be truly used versus looking at just the historically where we looked at that, like the numbers right now, and kind of use those. And so to do kind of like that official close once we get the audit will be super positive, right? So, so you can see the net income there of 122,986. So I think that is, I think pretty remarkable given just, you know, obviously we had, as you guys remember, we had kind of some shifting on staffing, but I think overall with everything we've done, I think that's a pretty positive outcome. We have, as you know, we kind of did have stronger revenue than budget in golf and media and recreation. We did have some savings in professional services. We were down on member records and stuff we talked about through the years on the membership transfer fees and some of that other revenue sources. And then when we get onto the MOD, we'll talk about some of the other revenue sources there. So, and I'm going to just go through the summary first, and we can go back and we can look at the detail if we have some questions. And certainly, just as a caveat, I'm still deep in reviewing all these numbers. We just haven't been sitting on them for a month, or we had them last week, so I'm still going through everyone line by line, just so you know that. On the MOD side, if you all remember, we actually had a deficit budgeted last year. Obviously this year it should be break even, and our budget is a break even number of 0 this year. So throughout the year, we've been trying to claw back and hopefully I was hoping we'd get closer to break even, November, December. Nothing like really jumped out at it in terms of huge swings. I mean, it was just kind of consistent. However, some of the revenue, like the member records, the service fees and stuff, were down. So we ended the year at a deficit of 480. Once again, that's also subject to change and stuff once we get through the audit. So we are favorable to budget, but we're not favorable from a break-even standpoint, which is where we should be. And like I said, we are hoping to do a little bit better from November and December. I was hoping in about 250 to 300. It's a little higher than that, but like I said, I'm going to kind of do a better analysis and a little deeper analysis. So when we meet next month, we'll have a pretty clear understanding of where some of those factors were and some of those big variables, so we can talk more intelligently to them. Any questions just on the summary?
Just for clarity,
MOD is not included in GRF results, is that correct?
That is correct.
Treated separate.
Totally separate. Yeah, in so many ways, it's treated almost as a completely separate business, really. One of the things probably gonna add to the package for us going forward, once we get some of the NetSuite reporting, is a little clearer report on the intercompany movements between the two entities. So it does distort payroll and some other things like that in terms of how the cash is moved back and forth. So I think that'll be something that come up to kind of clarify that, but truly, totally, these are just separate numbers and they're not included. One of the things that's really interesting though, Adriel, that is, I do feel there's a lot of value to have produce a consolidated report. You know, the audit, if you guys have ever gone through and actually looked at the GRF, you know, they do a consolidated position for the audit. And I think that because of that, it would be very advantageous for us to mirror that consolidated report so we can actually compare audit to consolidated actuals. We've never really had the ability to do that with GenArc, but now with the parent-child relationships of NetSuite, we can do every different level I want, you know, even like for your mutual and third, you know, with all the projects, it's very advantageous for me to have a consolidated third that I can then look across the projects to catch variances. So we're gonna be doing that. And I think it'll be very, especially when we get to the point this year when this committee meets and we can actually look at the audited results and be able to compare those audit results to a consolidated report. So we can see that the ending balances, the starting values in NetSuite will match the audited consolidated position when we move forward. So, yeah.
I may have asked this before, but my brain do not retain knowledge.
Hopefully I'll give the same answer.
So every 2 years in a row, MOD is in a deficit. And since MOD finance is separate from GRF, how do we cover the shortfall?
It's actually, GRF has been in a deficit too. If you go back and actually look at the final audit results of GRF, you'll see that we are also have been in a deficit position, which is why I think we were speaking to be cautious in terms of pushing surpluses through that weren't necessarily surpluses until we actually closed them out. How we make that up is only one way, is through the coupon, right? That's only one way. I mean, we can make good investment decisions and stuff like that, but it's this closed loop, right? I mean, we have trust, we have cash coming in, obviously from the transfer fees, right, to go to the capital side, right? But in terms of MOD running, like with this budget, running at a loss, that has to be made up through the coupon or we eat it and it bleeds down some of our cash.
So eventually it's going to end up in coupon increase if we run in
Yeah,
a
I mean, I think it speaks to how we really, you know, we need to really make sure when we start talking like surpluses and stuff like that, that we're very, very accurate on what numbers we have to work with, so we don't pass that savings to the coupon when they might be artificial, right?
So in the GRF accounting, how is that line item being shown? We just move money to MOD?
MOD has balance.
Yeah, I mean, we focus so much on obviously here we have the balance sheets and it shows up on the bottom line and, you know, technically retain losses. So, but to your point, right, Alice, I mean, honestly, you're gonna bleed off cash. We just kept doing that every single year.
I know.
You know, we need to make sure that the top of the funnel matches what's going out. Right? I mean, that's the biggest challenge and critical aspects that we're, you know, that we're making sure that we're covering our costs.
That's why the consolidated statement could be useful.
Will be useful.
We have a question.
Right?
Yes. So in terms of the deficit budgets, you know, those were done with using surpluses from prior years. There was intended to never be an impact on coupon, and that was to pay for the NetSuite conversion. So Todd, could you clarify what you just said?
Yeah, let me see if I can actually think the best way to clarify is, I would say that the best way to clarify is some of those coupon or surpluses were not, when we've all said and done and we closed out the year, there was not a surplus. And I think that one, let me just hold on real quick.
There was some history where we funded portions of like the NetSuite project from surpluses from GRF that even filtered back to the PPP money and so forth. So there is kind of a trail that we need to match from prior years.
Just want to make sure I understand that. So even though, we may be using surplus to cover that, so it doesn't seem to be impacting coupon, but eventually it does, because if we don't need to cover the MOD deficit, our following year's coupon could be reduced by the surplus. So anyway.
Yeah,
and
it has to,
that does
it has to impact the coupon. Once you run out of cash or cash surplus, you gotta get cash somehow, so you gotta get it from the coupon.
And we have that kind of anomaly of the implementation of NetSuite, right? That's not gonna happen every year. But we do have to make sure that when we're doing the annual budgets for MOD and GRF, that we're doing it on a break-even basis. That's what we're doing this year.
Right.
Okay,
Correct.
thank you.
Okay, let's go on, Todd.
Yeah. Obviously, this basically is the same information we just talked about. It's just shared visually into the same exact format, that we're comfortable with. Obviously, sharing this, Mary, when we get to Thursday for the board meeting, trying to maintain consistency in reporting, certainly for last year. Certainly when we move forward, there will be some refinement and probably some adjustments to these reporting formats, depending on how we utilize NetSuite and some of the report formats. But for consistency standpoint, this is basically going through those same results I just shared with you visually on the graph we're all pretty much used to. Obviously at the bottom of this, there is, we actually talk about the trust fund activity. We'll get into the MTFs here in just a minute in more detail. And then certainly when we look at the liability standpoint, obviously the pension is gone this year. That has been closed out. We still have to do the final audit and everything on it, but it's, it was a huge decision that the board made, and that obviously resolved itself last year. And then in terms of cash positions, we talked about this at the last meeting in terms of, so these numbers are all similar. Everyone's seen these numbers before. And we talked last month about how we had deposits coming in on the insurance payments, right, which we make on behalf of all the mutuals and the timing of that. I will just want to make one statement here. On the trust and investment recap, I'm actually working with a investment strategy, and basically we talked a little bit about this on how we actually want to look at a longer term. Currently, the ones that rolled over at the end of February and end of March are sitting in the cash sweep account right now, but I'm working with mechanics and also to actually come up with a next 18-month type of cash strategy for the investments on the brokerage side.
Todd, that stuff has a December 31st. That's 4 months ago. It's kind of meaningless. I think we need this as of at least March 31st.
That's all in, right, so that's NetSuite. I mean, we can, so.
You can at least get the bank balance per the statement or something. I think we need to know where we are today versus 4 months ago on cash.
Just going over year-end results. So
This is all kind of the point in time of year-end close that we're reporting on. Understood that the interest is where are we now in the monthly financials moving forward. We're that close?
But cash balance is just a cash balance. We could get that from the bank statement or something. I mean, what if those numbers are down 20 million? We have no idea. At least give us some type of cash balances as of a closer date. I think that's important.
We can do that. It's just honestly, we're getting 60 sets of financials out for the mutuals. So we can I'll pull that together, and we can actually, I don't know, definitely conclude that updated cash report for Thursday, is that something we can do? Done,
Okay,
okay?
now the detail.
So Todd,
Mm-hmm,
in terms of the investment accounts, some of them are called investment account and brokerage account, but they're all in money market, right?
mm-hmm. Well, some of them are directly some of them are directly on the mutual side too. There's T-bills, there's CDs, there's a bunch of different things out there. But I think this committee, and what I'd like to bring to this committee is I think this committee should be deciding on an investment strategy and where we want these funds to be and how we want them to be either laddered or not laddered. I think we need to be looking at obviously the current state of the state, when we think feds might drop their rates in the latter part of this year. And I think we need to have a more sophisticated approach to how we set our excess liquidity and where we put it. So I certainly would want to propose that we address that, maybe not next month's finance committee, actually have a proposal on what the investment strategy look like. I think that's very critical. Just something we haven't really shifted our lens to yet, but now we have
Especially
this
since the
money.
environment is going to get much more challenging
Mhm,
by the end of the year.
mhm. And it also comes into being able to forecast cash flow, right? Which is also something that we have not had a chance or have not put resources into, right? So I would like to see the initiative of both those kind of things with this committee.
Todd, am I understanding clearly? I'm looking at the monthly report and it has insured cash sweep account, 5.7 million, investments, T-bills, 3.7. So the equivalent of what you're showing here, investment status for LPL brokerage of 4 million is the equivalent of which line in this other, is it called insured cash sweep account? Under the monthly financials, I just switched over to that.
You would have it's the two LPL brokerages. So it's,
And your monthly financials, what are they labeled? Sweep account?
oh, it's all in the sweep.
Yeah, okay, gotcha.
Sorry.
Yeah, so
Well, when you-
5.7 million compared to year end 4 million.
Mhm.
Am I getting that right?
I'm sorry, what are you looking
So
at?
if you're
I'm looking at the monthly
So if you
financials, the
scroll
next
up,
one
those,
down.
those counts are related to the two account types are labeled LPL brokerage.
I guess you're asking where are those on the balance sheet that you're looking at?
No, because I was just responding to your concern about this is December 31st,
Mhm.
where is it now? But
Oh,
I'm just saying
now
that
it
in
is-
this month's financials.
Correct,
the
it will be in the
5%
sweep.
Numbers, and it's 5.7 million.
Yeah, so that money is now in, but I don't have March numbers for you.
Right.
Except for December number.
That's what you just brought up.
Yeah.
Oh,
December.
Gotcha,
Right.
okay, I'm
But
sorry.
I will make that
Said
addition.
monthly
I'll make that
Yeah.
addition. I'll replace this chart for March 31st.
Okay.
Never
Provide it
mind.
to everybody. Honestly, should have done that. I just didn't think about it. Just kind of head down.
I didn't think about it when we met last week, either, so I just thought about that. Okay, shall we get to the detail?
Yeah. And I know that it's, even for me, going back through all the detail kind of line by line a little bit, after the pause, it's a little challenging, but.
So I have a couple questions. There's the same question on both the GRF and the MOD. And we talked about this a couple of days ago. The accrued payroll number just doesn't seem right to me on the balance sheet. It seems way too high,
It's,
which will have a significant impact on the bottom line.
yeah,
So-
it's just cash, though. It's just cash that has to go between the two parties. You'll see the.
Because on the GRF, the accrued payroll is almost 2.4 million. Our total payroll is almost 15 million, which is $1.2 million a month. So we have almost 2 times the monthly payroll accrued. And on MOD, your accrued payroll is almost 2.8, and your total payroll is about 11 million. You have 3 times the monthly payroll
So if you look,
accrued. It seems like it's gonna impact the bottom line if the accrued payroll is over accrued.
it's, well, if you look at the GRF receivable, it's 2 million.
Can you state where you're at?
I'm just pulling it up. So if you were to look at, I mean, go down here.
Due to from mutual operations,
Yes.
So let me just scroll through that. You'll see here the due on the assets, you'll see a due to, due from,
yep,
right? So this $2 million is cash that MOD owes to
GRF?
GRF for the payroll. So if you look at the MOD, oops, sorry. MOD is probably on the same.
So that means the accrued payroll at GRF includes the MOD accrual. If it's offset by cash that they
It's
owe us.
correct.
it should.
So if you look at this, then down on the MOD side,
I mean, there was over $5 million in accrued payroll between both entities. When the total payroll for.
well, one, they're
the
totally
year-
separate. One is, so the payroll cash goes between the entities, right? So,
But accrued payroll should be offset by payroll expense, not by cash. So I just think those numbers are potentially wrong and could have a significant impact on the bottom line. If they're, unless you're gonna tell me it's gonna affect all the due to from, which I don't quite understand.
so the large payroll liability on MOD's books goes down when the cash is transferred from MOD to GRF. Right? There have been transfers in January and since, we just need to reconcile, make sure that we're all caught up on those. So the cash, the payroll cash, will the liability on the MOD side will go down to offset the due from on the GRF side. So GRF cash will go over there. It's a cash transaction. How we fund payroll.
You're funding payroll, when you fund payroll, you should be between cash and the due to from, not the accrued.
Amanda sent a message.
What is the message?
Says, Amanda
Yes, we
says, accrued payroll on each GRF and MOD also include vacation accrual.
That happens.
MOD due to and from GRF figure includes some other things in addition to payroll. That is her comment.
Okay.
Well, you might give us a schedule on that, just
They
because he's
should
got
break it,
the
they
look
should
of
break it out,
concern.
maybe we
in
should
his
break it out
face.
in different lines or something, because it just doesn't seem right to me. I understand the vacation and that could be a significant number. Okay, any other questions on these detailed statements?
Just on utility, we are not terribly out of budget, still we are, we're under budget on both water and electricity.
Mhm.
I just wonder with the new solar farm
Mhm.
online this year, will we see a difference in 2025?
I don't,
We budgeted a slight difference for 2025 because it's still not online yet. So we took an estimate of what it would be starting in I think the beginning of second quarter for budget. But it's not a huge difference when you consider the rate increases and all the other fees, but there will be a overall benefit over the life of the system. I don't recall the figure off the top of my head, but it is a substantial savings.
So with that online, you said second quarter, will we be kind of somewhat immune from PG&E's increase?
You're never
We have
immune
that
from
contract.
PG&E's increases. Because all of the, it's not a closed system, so all of the power goes into PG&E system. You get then a rate for basically selling it to the grid, and then you purchase it back. So the rates, as they change, they add all kinds of storage, delivery, and whatever else they can think of to capture their money. So no, you're still not immune from.
No protection from them.
A little bit of an offset problem.
It's an offset.
Maybe a little bit, yeah.
And what was the big decrease? You said something about professional fees. There was what was that mainly from?
So, yeah, so basically it was bigger, it was a switch, so professional services was down because the original NetSuite implementation, we looked at bringing in more people, and then it was converted in a temp, so our temp help went up and our professional services went down, but when
I
we looked at,
remember now.
we saw kind of that switch between those two categories.
Anything else on this? Okay.
When we look into, when the audited financials are completed and all of that, and we look into the consideration of surplus, it would be nice to see it on a timeline basis, like this year we had this much cash and this kind of surface, so we can just see what the run rate is on that. I think I would have trouble just looking at a snapshot without knowing what's been happening.
Right.
So which month will we get to that consideration? It has to be before budget time, right?
Well, the
That'll be
audit-
before budget time, but we'll want to have the final audit till 6:30.
Yeah, June 30,
Uh-huh.
because it's been extended 2 months. We got an extension from the bank. Normally it's due 4/30.
Right now.
We got a next 2-month extension from the
So
bank.
probably like July meeting then will.
No, it has to be done by June 30th, so probably.
Board agenda for
The
June.
board agenda on
for
the
June.
last June meeting. We'll have to, because the GRF will have to approve it on their June meeting. So it gets
I
to,
see.
so it should be the June meeting. So mark your calendars, it'll be a fun meeting.
Oh, goody, you know.
Oh, surplus.
Okay, next, Ann?
Sure. Todd, do you want me to drive or do you want to?
Oh, I can pull up your schedule,
You
sure.
had it open, so.
I do.
Sure, so what I want to do is, because we still don't have our monthly financials, what you have in your packet is just the internal, as we process the invoices, we've been just keep tracking it internally. So it at least gives you an idea of the projects that were kind of carried over from last year that there's traction on and activity on. So I do want to go through those with you really quickly. At the top of the spreadsheet, you'll see the pickleball project. And at the last board meeting, we received an authorization to proceed with bidding. We haven't gone out to bid yet. You know, it was depending how long we could get our documents together, when we got our final permits from the city. So we just received notification our site development permit is finalized as of last week. We're getting the front end documents together, which is like kind of all the narrative, all the instructions to bid, all of that stuff should be finalized this week. So hopefully by May 1st, we'll be sending the project out to bid. And with the timeline with that, we want to keep it open a couple of months. Then it's going to take about a month to kind of negotiate and get things in order. And our schedule is targeting taking the recommended contractor through the committee roadshow through August.
How many bids are going out? Do you know yet? How many come?
There are 4 contractors right now that we have on the list. We may add some more, but we've been in touch with several of them. So like 3 out of the 4 of them, and they're all pretty eager to bid on this. So what's happening in, like with some of these contractors of the typical size that we want for this type of project, they tend to do a lot in housing development, but that building market, that construction market has flattened. So they are looking for other projects and.
Hopefully that's good.
Yeah, so it should be a competitive bid.
Yeah, and when we get the bids from the contractors, what if there's an increase in materials costs? So it's they eat it, or do these contracts come in and they allow some?
Every one of them that you'll talk to. So what happens is there's usually, they will commit to a bid for a certain amount of time. And I will say every contractor right now is putting a provision in case of some type of uncontrollable global occurrence or something like that.
Right.
But I mean, some of it's pretty standard. We're gonna have them lock into their bid for start of project within 6 months of this, because it takes us a while to go through our approval and start. We don't think we'll be breaking ground on this till the end of September, beginning of October. So again, if we go into August to approve the contract, then we need a little bit of time for that.
I see, just because, you know, when we started all this pickleball stuff, the world was a different place than it is right now with tariffs and the political situation and all of that. So I just want to make sure that we're careful about this large expenditure, that like when we made the decision, it was a different world. And, you know, it's like, so we just forge ahead because we made that decision before things changed. We might have run away inflation and tariffs.
The only decision is to keep the project moving forward. No expenditure has been approved.
But I got you, but would we put a halt on it if we thought, or is there some sort of provision for this, like?
That's why we review it through the different boards.
So
But I will say, in talking to the companies, what I can say is we need to let the experts submit their bids. In most industries, they've been normalizing certain pricing. So we already know that, for instance, the big structure, it's a steel structure, it's a Butler building. We already know that there's normed in the market, so that increase, which is like $1 million of the budget, is about that structure. It's a 10% increase. The other materials, most of these companies, the size of them, the scale of them, they have the product domestically. And so they haven't increased on many of those materials from when we got that estimate. So again, I think we can play what if, but the best thing to do is we bid the project. It's like with any construction, it's never gonna be cheaper than it is right now to go ahead and get the bid. And then the different bodies respond to the information once we have it. But in talking to the companies, it's going to be a competitive process. We don't think we know at this point, it's not gonna be this wildly out of control, arbitrary bid. There are parameters that have to be committed to by the contractor.
But to answer your other question, we are not locked into this project in terms of committing to a contract at this point. So when it goes out to bid, and once we get those bids in, the board, the finance committee, if it is above what our estimates are, they have to, you guys will weigh that, the board will weigh that and decide, should we proceed forward or do something, make some adjustments, but we won't know that until we get those competitive bids in.
Yeah, gotcha. At my neighborhood meeting, Cheryl was there, the fellow brought up about like the overall situation too, like financially for GRF. Well, how will we be impacted by all of this? Not even just pickleball. So that, and I don't know if this is a body where we start to talk about banking, we would call it a stress test. How much reserve do you have to absorb whatever might be coming down the road?
Yeah, that's a good point, and we've been talking about that in there because there is quite a bit of anxiety out in the global market and for people's personal markets. That will create some additional scrutiny of an expenditure in projects such as this. It doesn't necessarily change the actual internal financial ability to complete this project based on where our capital budget and amount and reserves and everything else stands. But the optics of, should we be doing a project like that when there's uncertainty affecting people?
That's the point, yeah.
It's something that has to be weighed, but when you look at, in comparison to our budget, you look at what is coming in thus far in the MTFs, you look at the reserve that we have built up, what is outstanding, we're in a really good place to be able to proceed with this project.
Assuming the bids come in at a reasonable price and all
And
the
that's
other
something
things.
that's
Absolutely,
Absolutely. It's
absolutely.
all still ahead of us,
We're
still ahead of us.
Just barely crawling. We got a long way to go.
Yep.
There is a, I understand what you're saying, but there is a strategic element to this though. So in terms of long term, so a lot of the big construction projects are done during a recession because it's cheaper.
Right.
You know, so it may be by December or next spring, we'll be in an entirely different place and the bidding might change dramatically.
So I think Ann said it best. Very few times does construction costs go down. The longer you wait, the more it's gonna, 98 times out of 100, the longer you wait, the more expensive it's gonna be.
Yeah. Although I have heard people tell me that, I won't use their name, but someone who was a city manager type person, who said that they actually saw some stuff come through and a recession in 2008. And they deliberately held and then went ahead and got some projects done at a substantial savings. So it is going to be an interesting call
And
as
kind
to
of
how we
unpredictable.
go about this. You know.
I believe our event center was built and bid during one of the down cycle. And I think we got a good price on that.
Mhm.
Okay, anything else on pickleball? Can we go to the next line?
Sure, and I'm just gonna talk about the ones that have activity on them. So I don't know if you want to mention the with the MOD, the report.
No, just that we're continuing to evaluate a lot of options. We'll be reporting back on soon.
And then moving down, the golf bridge replacement, that's a project that we've been, working on. There's been lots of navigation with different environmental groups in order to get to the place where we are right now, where we're about ready to put together kind of the construction documents. We're looking at different pre-built bridge products, and then we're gonna bring those to the planning committee next month. For the golf course pump replacement, the work that's continuing into this year were some filtration systems that were approved at the end of last year. For the phase 3 solar, actually, this is only phase 2, right? So for the solar project outside of Gateway. So we did have our shutdown this past weekend so we could make all the connections to the panel. The city needs to do their inspection, and then PG&E comes in and inspect, and we anticipate that by May 31st, we'll begin the power harvesting. So that's pretty exciting. That's coming to it's not really coming to a close, it's just a beginning, so that's pretty cool. The pool replastering, I just want to mention that. You're going to see that on the agenda a little bit later, and I'll talk about it then. And then at the entry control facility, we just completed the installation of a generator because the one that they had wasn't adequate, and there were lots of disruptions of power during some recent events that we have. And so by the time we get that final in, it'll be a little under the 30,000 here. So that's what's happening in the world of capital.
Okay.
Happy to answer any other questions.
On the NetSuite implementation, for a while there where we were seeing kind of a monthly, here's how it's progressing in terms of costs. We haven't seen that in a while. Will we?
Yeah, we'll get a recap on that. It just hasn't been, there's just been a lot of work been done and a lot of invoices coming in and.
The first priority, but it would be good for us to see.
Yeah.
We put in the budget, as I recall, 400,000 or 500,000, kind of a slush fund.
544, 472.
I knew 4s and 5s were in that number, yeah. So at what point will we know to use that money, or that can flow back into the bottom line?
Yeah, well, so on that side, that is the implementation side, right? So the stuff that can be capitalized. So that will include the implementation of Workday and also FSM that's ongoing right now.
FSM.
With, Field Service Manager, that's the work order, that's everything.
Because we were like talking, I'm like, oh, we're working still, even though the financials have been going up, like my team has been working so hard back in on the NetSuite trying to build the work order system process.
Yeah.
And it has been a process, but we're working hard and looking to hopefully have that portion launched in the middle of summer.
Yeah, however, I don't see us ever going over that number. I mean, I think we're still in the zone, but I mean, a recap on what those are.
Yeah.
I do have some scope of works and some estimates on the Workday. We're doing that obviously right now as well, because that goes live June 1st for all the budgeting.
I'm sorry, the Workday.
Workday Adaptive is the financial planning piece, sorry. I suppose that's gonna be implemented and go live June 1st, right, for the budgeting season and all the forward-looking planning tools.
Yeah. So my general question is, it was kind of an indeterminate slush fund at budget time, but now you've got things lined up against the use
I mean,
of
some of
those
it is
funds,
still like on your piece, I mean, we don't know exactly, as we, even on the, for example, on the accounting side with Allied Cloud, that is our partner working on implementation, there has been, more work here, less work on this side. On Everyone's piece, obviously, those are still ongoing. We don't have a complete estimate or hard number on those because we're in the middle of it. I think the Workday adaptive piece is very, very clear. It'll be probably 70,000. So I think we're right on track for that. So I think we're really good with the 544. And then the other side of that was on the IT operating side, which is the subscription fees, which we had 170,000 in the budget. We'll be completely on board with that. So
We still have the whole community services side of the project that we're in the midst of, Ann's in the midst of evaluating along with Ann Peterson.
So there's definitely some
Those
moving
options,
pieces.
so that hasn't even been selected yet. So there is still
So there's gonna be, I
significant
mean, there's gonna be
unknowns.
expenses on this
Absolutely.
going forward for probably another year,
Yes.
realistically. And so having an idea of what those are and what we'll be capitalizing and what we'll be expensing, we really need to sort of keep track of that.
And you've been working with the auditors and their capitalization versus expense, and they're fine with their,
Yeah,
they agree with everything you've done.
they do, but obviously,
So
we're
they still make it be a
gonna go
change.
through it
Yeah,
all
absolutely.
again here with this current audit.
Absolutely, absolutely.
So if we're increasing the scope of Netscape by some of these new features, shouldn't that be separately budgeted from the original project? You know, what Nancy mentions that we did have a contingency of about 400 to 500,000. And should that be used in scope changes?
I don't think we've changed the scope. It's always included additional elements. We just haven't executed all of it at once. I mean, this is spanning a significant amount of time, but it's always been kind of this inclusive umbrella of different components.
If that's the case, we should have budgeted for it. It should not be part of it.
We did budget,
Yeah.
we just didn't have line item detail in the budget. And if at such point it goes under or over that, then
Because we always
Tell
put
us.
10% contingency. Contingency is contingency, right?
Yeah, and I think it was all, I think the scope hasn't changed, Alice. I think it's all been part of the budget, but we do need, as Adrian said, the final accounting, or not the final, but the current accounting.
That means we didn't really include the budget for those items that will still need those capabilities.
I think they were included in the original, but the other thing is, I think they were capitalized, so they may not, some of them are gonna be capitalized, which are not in our operating budget, but Todd should have given us a listing of what those all were, I think.
Yeah.
I'd have to go back and look.
Right, I'm thinking that 400 something was a contingency, 10%, right?
I don't think of it that way. It was a extra money that it wasn't called contingency,
That's
it
right.
was
No, it
detailed.
was the original budget
Original
amount
budget.
that carried over into this
Okay.
year.
But I thought every budget, every project, we do put in about 10% contingency, right?
It depends significantly on the project. And I don't recall the exact budget that we presented for this project. It's spanned now several years and definitely has evolved. But where we're at right now, in terms of what we have budgeted in the operating and the capital, we feel like we're still within that budget to be able to accomplish what the original intent of this project has been all along.
Okay, yeah, I'd just like to see these items clearly defined.
So Todd, I don't know whether this is a right time to bring this up, but you've talked about how with the new NetSuite implementation, you do a analysis of variances in terms of future predictions and stuff. And maybe with that variance kind of analysis, we can couple with Nancy's idea about doing a stress test. Because all of our budgets are based on certain assumptions.
Right.
And some of the assumptions might be wrong in the next 2 years.
Usually are.
Yeah, they usually are.
Some might
So
be
I
right.
think we should do the variances analysis with a certain amount of understanding about what our assumptions are, and if our assumptions are not met. And that goes to the idea of the stress test.
Anything else on capital projects?
Okay.
No other questions? Okay, MTF next. just wanna know what's going on. What is going on? And that's a good and not a negative way, in a good way.
The dam is broken a little bit.
Yeah,
Yeah, I mean, it's another positive month
another
compared to
real
last
positive
year.
month.
Yeah.
Just for an update, Todd is gonna be getting us,
I got some.
okay, Good.
I'm still writing the reports, and what we brought up in with Marion and Dan in our prep meeting is, breaking down these sales by property type. We talked about the exemption code stuff too, but, so, I can tell you that, and I'm still writing a report, but, the first one was just how many of the sales are actually, being generated from co-ops, so 1, 2, and 8. And February and March, I haven't got January yet run, but February, March, 37 of the total 96, 37 were co-ops.
well, that's much
Say that
larger than I
again.
thought.
37 were co-ops
Larger than I thought.
in the January, February.
And the breakdown in co-ops is roughly 50% of the units?
Yeah.
In total, roughly?
It's about a third, yeah. About a third, so it's 1,278 in first and 1,378, and then 1,387 in the second.
31.
And then very few really in 8, it's less than 3.
40%.
40%? And you said how many, Todd?
37 in February and March, but Sherry is actually running these reports. It's a cool, greatest thing about NetSuite is the data's there, you just have to go pull them out and extract it, so, which isn't as quick, necessarily is easy, but it is there. So 37 in February, March, and she is rerunning those.
Which is 38.5%, which is pretty darn close to the 40%. So the co-ops are
Balanced, it's
are
balanced.
moving
Yeah.
with no loans, so everything's still all cash?
I think there are still some, non-traditional financing going on that various realtors and finance groups have identified. Those are somewhat hit and miss, but there are some investors that are making that happen.
I mean, co-op financing was never.
There has been
FHA.
No, you're right.
So I mean, the lack of insurance coverage has nothing to do with whether they could get financing.
Because it's cash based, right?
Well, because you're not buying a house, you're buying a share of a corporation,
Okay.
which
But I would-
entitles you to live in that house.
When I came here, Adrian, I got a loan on the co-op with no issues. It's just a regular, through a mortgage broker.
But was it truly an FHA loan? I don't think so.
No, I don't think so either.
Yeah, I mean, it's always
And
been,
it's been sold, I was on my 4th mortgage company, it's been sold 3 or 4 times.
yeah, yeah.
Yeah.
So all I'm saying is that the insurance problem mostly affects the traditional condos as opposed to the co-ops.
Okay.
It's I think. And we're certainly not seeing any difference in take-up, so don't worry about that.
So moving forward, we're gonna have an addition to this, which is gonna be sales by mutual. Right, because we have it now that member records are combined, so we can actually see, well, we know where they were sold, we just never put a report together. There's different databases because that summarize it, so we're gonna add that as another data point so we can see where it's actually happening.
That'd be great.
So I have a question. We previously talked about, having a committee get together and talk about options and potential for how we can change the transfer fees and maybe looking at why we aren't getting transfer fees on certain things and could we and all of that. What happened to that? Did that go away?
Well,
Did that-
Coming up.
We're gonna talk about some of the things in transfer fees in new business today.
Okay.
And I think once.
But that's as a result of that committee that
Well,
was put
it's-
together or?
No, as a result of Todd being able to finally get some information,
Sophia.
get some information for us. And once we look at that, we can
She wrote
decide
it.
that the committee wants to meet again and go through it. But we need to go through this, the new business to look at this, and if we, no, I'll wait till my comments till we get to that. No. Okay.
So just scroll down to the bottom here. Good news is we're technically,
And Todd is still trying to get us to go down to the bottom, Todd, like you just said,
yeah,
the breakdown of these exemption codes down at the bottom, so we know what they mean, instead of just some random numbers. that-
well, and I
they
think
look
what they
like-
need to
look
do is
like random
when we get
numbers.
to the next piece, you know, all the work that Sophie has done. that
Yeah.
We need to supply that now to those different categories that she clearly outlined.
Yeah.
But obviously, we're favorable by $374,000 over prior year through Q1, so.
Adrian, have you talked to any of your real estate people to see what?
Haven't heard anything specific
Okay.
from anybody.
Okay. Maybe look at the graph.
Oh, yeah. Actually, this one.
First quarter is a good quarter.
Yeah.
Okay,
This one here. Yeah. So, yeah.
any other questions on this?
Okay,
Okay, Todd, do you have any NetSuite update at all?
it's happening. I would just say, you know, where we are right now is, we're just at a couple critical points in terms of the automatic bank rec and the feed from City National. We pretty much figured out, on the mechanic side, so obviously the bank rec piece. And then we're at the point right now, we have been loading, as I just talked to Adrian here before the meeting started. Obviously, there's the challenge of the year-end 24 balances and stuff, and how many times we would load those, right? Because we want to make sure that eventually all the audit adjustments get in, so we have a very clean ending and a new starting point for NetSuite, right? And so that'll affect the balance sheets, obviously. Where we are though, in terms of being able to now finally be able to produce pretty much all the documents for the mutuals, we're coming into that. We turn the corner, produce budget to actuals, like I said. We're still gonna have refinement of the report writing. And then now we're obviously focusing our attention on making sure we can actually now do this current year's financials for all the GRF catch up, which is ongoing. So, but in terms of the system itself, you know, we're still in the thick of it, and you hate to say that when you're in a live environment, you keep coming up with new things and have to do new workarounds. We document processes, ongoing training for the staff. We're just going to be moving into the point where we're starting to full focus on building out dashboards in terms of what their actual front end looks like for employees first. We're starting to have meetings with myself and the mutuals on what the treasurer's dashboard looks like and KPIs for them. So it's all progressing. I think the most critical part, right, obviously, is we've turned the corner and we're gonna be able to get back on track here, producing all the financials first. So
Are
that's
you
what
expecting by our May meeting, we'll have January through
I'm
April financial
expecting-
statements?
yes.
Yes.
Year's here.
We got that recorded?
If I could jump in just real quick, I know this has been a huge pain point for this committee, for the board, for mutuals, mutual treasurers, and we certainly appreciate people's patience as we work to implement this system. But truly, this is, we're starting to see the daylight. This system is going to provide a new foundation of this organization. It really is gonna help us transition to, as Todd always says, Rossmore 2.0, where what we can deliver, the amount of information that is available, but more importantly, the amount of cleanup that is going on, the amount of processes that the department and departments are looking at and working through that have historically been built up as workarounds through GenArc. We're breaking those down. This is a foundational change, so it is worth the wait, and there are good things happening. This report today is a small step, but we are making tremendous progress. I don't know if Amanda's still on the line, but she and Sherry, again, have been working tirelessly to get over that hump along with the rest of the team. So, again, appreciate everybody's patience and the mutual board's patience, but hopefully you will see that the wait has been worth it. And we should start producing very soon, so. Good news story, I think.
The 2024 year-end report data is still it came from GenOS database. So going forward, our financial report will be pulled information from Netscape database.
Next week.
Just a thought, since we're already 4 months behind, when Todd's department have to generate these new report, is it really necessary for us to see January, February, and March and April? Or can we have a quarterly one for the first quarter, then going forward monthly? I just tried to
No,
lighten the
we actually talked about that at our prep meeting, and we were fine with either doing a quarterly or a 4-month, what is it? Tertile, or the 4 months. But at some point, but he needs to generate each monthly internally. Whether we see each month, I don't think we need to.
Exactly.
Because he needs to do each month internally to do the comparative from prior years next year.
Right.
But as far as this committee, I'm fine with just seeing a quarter, either through March and then April, or even through April as one number.
I think to see a quarterly one is a good one, and then a monthly going forward.
Yeah.
Okay,
So we can talk about it.
all right.
And I always feel like sometimes a deeper dive this committee may want to look at it from quarterly results in terms of budget variance is probably more meaningful than monthly.
In the January and February, when we look at budget versus, they're meaningless
Exactly.
because there's not enough data. At least we're starting to get some data.
So then I think that's a good idea in the sense that we can review the monthly data online and actually have the quarterly reports for a deep dive.
Yeah.
But then that saves the time of the committee too, to do other things, I think.
Yeah, I agree, Harry. Do the quarterly statements deep dive, and monthly just do a very skim on top
Right,
and
absolutely, yeah.
do some other things that we should be doing. Okay,
That's it.
is that it? Next is the, any update from planning committee besides what you already gave us?
I think Jeff and Ian
Okay.
answered everything.
I don't think we have any unfinished business, so we can move on to new business. And I guess you're up again.
Yes, so there was a project, if you recall, in last year's capital budget to resurface the Tice swimming pool, all of the pools within the Tice complex. And we bid the project, we had a vendor, they were not performing to the contract, so we canceled that vendor. But it is a project which, from a safety standpoint, we have to complete. We don't plan on scheduling it until the end of the year. We want to do it later in the year when it gets very hot in the natatorium and while the outdoor pools are still open. But in order to secure the scheduling time, we need to commit with the vendor now. So we're asking for the committee to consider a recommendation to approve a capital budget expenditure of $221,924 for this replastering project. And also authorize the general manager to execute the agreement with Chambers Pool. We did send out bid requests to 6 different vendors. Chambers was the only one that actually had the complete, did all the work that we wanted them to do. And that includes the contingency as well.
Have we used them in the past?
No, but they have a good reputation. I mean, we've done references on them.
Any other comments on this?
I have a question. In terms of selecting them, and you said you sent out 6 RFPs,
Yeah,
and the others did not do.
look at the
full-
bottom, if you look at the
Yeah.
bottom, if you can open that up, and can you open up? Go back to the agenda, the attachment.
So there was,
Yeah.
it's in the report.
It's in there, open that.
Just touch it.
No,
No,
no, go back.
Just over quick.
No.
Sorry.
get too far.
So I can essentially, 3 of them didn't respond at all. One of them no longer does work in this area. It's not their service area. The one that gave us a bid actually didn't include the cost of permit fees or obtaining the permits, which we have to have the contractor do, as well as startup costs. So once you do the replastering, you have to fill the pools, start the water and do some balancing. That's on the vendor. They weren't gonna do that part of the job too. So not that it wasn't complete. Well, it was incomplete. They chose to say, no, we want to do the job, but we don't do this part of it. So really Chambers was the only one that was the complete.
And Chambers
Complete
was 15,000 cheaper than the other one too.
Correct, yeah.
Which didn't do
Okay,
all.
that was my
which
second
didn't- yeah,
question.
If you look at the bottom of Todd ever opened.
Yeah, I'm reading it
They
right
have them all on there.
Yeah.
I'm sorry, thank you. So, and
Yeah.
any other questions?
I have a
Todd,
question.
you
So
sharing?
this
You just
dollar
stop sharing, I'll take
amount,
over.
so if we were into this project previously, it was previously approved for whatever the dollar amount was. You said that was canceled. So is the dollar amount that you're requesting here for the full project, is it an additional amount above what was previously?
I think we budgeted one, it was about 175, I want to say, with this other company, Butler. We knew that it was going to be more, because when we looked at all the other companies, they were actually, we kind of put some soft requests out there so we could make sure we had enough moving into this capital budget. So we had to add to what we potentially could ask for, and I think we had a placeholder of maybe 250,000.
Yeah.
So overall, it's coming under what we projected we'd be spending.
But that's not 220,000 in addition to what was already approved. That was
Correct.
canceled and went away.
Correct. It was, we
It is
didn't
part of
expend
it.
anything. We didn't expend anything. They were under contract, but they did no work. So,
Okay.
Yeah.
Okay.
yes, so it's not an addition to.
Any other questions?
I do, the amount that they did is 201,000. Why are we asking for a recommendation of 221,000?
You always want to hold a contingency, because we pull a permit, it gets inspected, and sometimes inspectors will say,
Okay.
well, the way you did the plaster there, you need to grind something out, or,
Okay.
so,
So the additional amount is simply because there could be a contingent effect. Okay.
correct.
Anything else? If not, anyone want to make a motion, Mary?
I move that the Finance Committee recommend a capital budget expenditure of 221,924 for the Tice Pool replastering capital project and authorize the general manager to execute an agreement with Chambers Pool, Inc. to be paid from the trust fund.
Is there a second?
Second.
Second. Any further discussion? If not, can we have a roll call, please?
Certainly, Ring,
Yes.
Lau,
Yes.
Byram,
Yes.
Castillo,
Yes.
Singh,
Yes.
Star,
Yes.
and Hurd.
Yes.
That's unanimous.
Okay, next item under new business is the MTF.
That's you. Okay, so this is a presentation on the membership transfer fee exemptions. So as we all know, right, we get a membership transfer fee from the majority of our sales, but there are some instances where we don't get a membership transfer fee. And so I'll just go through those right now for you. And there's some examples, which I think is really the beneficial part because everyone can read the actual policy. But the first one is for a current member. So this is somebody who already owns, and then they decide to buy a property somewhere else here inside Rossmore. They're not gonna pay a membership transfer fee. Now, this also is where flippers fall into, right? So this is a flipper. A flipper owns a unit in Rossmore, flips that unit and buys another one in Rossmore and does not continue to pay a transfer fee. So that's an issue right there that I think was probably one that is gonna need the most thinking about and maybe where we could make a change.
Do the flippers pay a fee one time and that's it, or they never pay at all?
They pay one
They
time
pay one time.
and
In
then
a
it-
time frame.
And then they have a certain amount of time to purchase again, and if they go past that purchasing time, they have to pay their membership transfer fee. So they can't buy here and sell here 1 year and then come back 5 years later and do it again. It
Okay.
has to be a continual situation. I'm not sure what that day frame is. I don't want to quote it, because I'm not 100% sure, but there's a time limit.
One of the main things that's kind of a theme through here, and even though it is the property that transfer of the property that triggers it, it is a membership within the organization, and you can only be a member once. So because if you currently own property here and you're a member, if you transfer or you purchase another property instead, you move to the Waterford, you're still only a member once, so you retain that membership. That comes up quite a bit. So how come we're not collecting those? Well, how come the flippers, they're a member one time?
But then when they sell to someone else, if they are not a member,
Then the
then
new
we collect
member-
the fee. So basically, we're incenting flippers to flip, to do a nicer unit maybe, so someone else will come in and buy.
So there is some frustration to flippers for many reasons, but there is a lot of really good benefit to flippers.
And now, in this case, though, we're saying Lisa is buying a new property. This is a person, not a corporation.
We'll get to those other
Right.
examples.
Yeah.
I have a
So the
question
person's
about
looking.
120 days, because I know on the contracts, they could have bought 5 years ago. So I don't understand what the 120 days means. Or could you, sorry, the question is, could you please explain the 120 days?
Sure. So if somebody terminates their membership, they
Or
have,
if they move out?
they move out,
Okay,
or if
that's
they
it.
sell, they have 120 days to repurchase before a new membership transfer fee kicks in.
Oh, interesting. Thank you.
So that's what I was talking about, where they can't just buy one and do it and then come back 5 years later and do it again on that same membership transfer.
Thank you. What if an owner, members, want to buy a second home? Not flipping it, just want to have 2 units. Do they have to pay again?
No.
No, so they can own more than one
They
concurrently.
can own more than one, and then the occupant of their rental will have to either pay the FUP fee or be a co-occupant of someone
Right.
else.
Or if they designated an occupant,
Yeah, that's.
then the fee would be triggered.
But that means they would lose their
Right to it.
opportunity and their rights to use the facilities.
But they can lease it out.
Yeah, and then that person
And
pays the
facility
FUP fee,
usage.
which we've raised,
Okay,
okay?
Jeff, could you just be a little bit more explicit about what you said about we like flippers or the actual benefits of flippers?
So flippers, obviously, once they flip, then the unit is sold and the fee is paid. So it just takes a little while longer to get to that. But there's also the benefit of increasing the value of the home, the unit, which kind of then matches what it is the assessments are. So if you're charging assessments based on the mutual of a certain amount and the unit doesn't meet that expectation, it's harder to sell. So it makes the community more valuable.
It's difficult to sell like a $1,500 coupon on a unit that's straight out of the 70s that has Formica countertops and linoleum flooring, right? But if we put in that, if they upgrade it with, some nice granite countertops, new cabinets, new flooring, and then we say, okay, now we live in a unit that matches kind of what our coupon is, right?
Also means the mover it's readily movable in, they can move in tomorrow, in theory.
Turnkey.
Turnkey, thank you.
Not that,
Versus-
I mean, it's difficult for people to buy here and have to renovate it. And
Live here.
it took us 9 months
Yeah.
between the time finding somebody to do it, getting on their schedule, and then the 2 or 3 months it took to actually do it. So, I can see where at this age, you don't want to wait 9 months.
This is a tricky question.
No.
Okay. Maxine and I are married.
Congratulations.
Congratulations.
We're both members, right?
Mhm.
Okay. Maxine is pissed off at me.
I understand that.
We're still married.
I'm sorry.
She goes and buys her own unit. Are we now, each unit, we still members?
Probably.
Good question.
I think we have a
Let's see if we- let's
scenario
see if we
that
come up-
covers
come up
that.
with that.
We don't have, I don't know if we have a scenario where they separate.
We have a scenario where they get married. I know.
Yes, exactly.
But
That's the
let's
next-
go through this, James. If we don't get an answer, we'll put it on the list.
Right.
Ted, did you?
I think one of the, how can I say this as a question? I can't say this as a question.
Say as an answer.
Say, is it true that? That makes it a question, then say whatever you want to say.
Isn't it true that when a flipper flips a unit, it also all of the infrastructure is brought up to code and brought up like with new refrigerator, more efficient running things, which saves us all money and makes it safer for the building to operate, so.
And many of the associations, the mutuals are putting into their policies and their governing documents that they want to have a post-demo inspection done when there's major reconstruction, so they can see what the infrastructure is, and then also putting in stipulations in their governing documents that if there's a full down to the stud remodel, they have to redo the pipes if there's galvanized pipes, they have to redo the electrical wiring if it's aluminum wiring, so they are trying to be forward-thinking in those situations and having the flippers take on some of those costs so it doesn't get pushed onto their members.
And the flipper actually did pay one membership fee, the initial one. So, yeah, I think that's okay.
You know, the person who buys a house and renovates it and then sells it becomes a flipper. They didn't necessarily move here. They weren't flippers until they offered basically that unit for sale. So it's not a designation before they offer their unit for sale, right?
Well, we have some very, very well-known flippers that are here in the valley. There's about 20 of them, right? And so we know when they buy a unit, that unit's gonna go back up for sale within the next 2 to 4 months. Okay, so the next one is joining by a non-member. So if a Golden Rain Foundation member who has already paid the membership transfer fee shares property title with a non-member, the fee won't be charged if the member remains a member according to bylaws. So this is the example where if John Smith gets married and he's already paid a membership fee, then he has a new wife. Does she need to pay a membership transfer fee? No, she will not be paying a transfer fee, or whatever his spouse is will not be paying a membership transfer fee.
And if they're not married, does the same
It has to be
a legal?
marriage or a domestic partner.
Yeah, they have to show.
A definition.
Legal document.
Yeah, legal document that shows that they are a spouse. The next one is inheritance. So if a property title is inherited by a spouse or a registered domestic partner and the deceased member has already paid the fee, no fee will be charged. So example is Jane Doe inherits a property on Elm Street from her late husband, Mr. Smith, and John had already paid the membership transfer fee when he originally purchased the property. Since Jane is John's spouse and he's already paid this fee, Jane will not be required to pay the membership transfer fee.
So what about children?
Does not
Next,
qualify.
coming
It's
next.
not qualified.
It is
children.
only inheritance by a spouse or domestic partner. So a child does not
How
qualify.
do we police that?
Well, let's just keep going through this, okay?
A little bit of room there, Tom.
Yeah.
Okay, inheritance held for resale. If the property title is inherited by someone other than a spouse or registered domestic partner, the fee must be paid. However, if the inheriting person can request a refund of the fee, if they do so in a timely manner and they meet certain conditions. So those conditions are this: the inheriting person can prove that they have not occupied the property or used the amenities. So basically what this is, everybody, this is a pass-through. This is somebody who inherits a piece of property, never uses it, never lives in it, so doesn't pay a transfer fee, but immediately sells it down the road to the next person because they want the money, they don't want the property. Then they don't pay a transfer fee, but the next group that buys does, right? So that's all this is. I could tell you all this list and read it out, but that's exactly what's going on here.
But do they have to have sold it to request the refund, or can he just never live here?
they can never live here, but they still have to pay the fee.
Right.
Right, as soon as they inherit it, they have to pay the fee, but if they never live here and they can prove that they never lived here, never used the facilities, then they can request a refund.
But they don't have to wait for somebody else to buy that property to request the
No,
refund.
look at,
It
look at
must be made
C,
within 30 days of
Look at
transferring
C
the
on
property to a
there.
third
Let's-
party.
They
There you go.
you gotta wait till they transfer the property to someone else and within 30 days of that.
Okay.
Yeah, so they, within 30 days, so if they transfer the property upon sale, they've got 30 days to request. If they wait 35 days, that's too late, they've lost their transfer fee.
Okay. So when the unit eventually sells, or if it is sold, that's when the new transfer fee is paid.
Correct.
And they can then put a refund in for the old one.
And so theoretically, that person that owned the property for a short period of time never used anything, so never really should have paid a transfer fee.
How do they go about, it says here, inheriting persons can prove that they have not occupied the property or used the amenities? How do they go about proving that?
It's a good question.
I don't know that we have set criteria, but it's pretty obvious if somebody doesn't ever occupy a manor, utility bills, or other ways you can prove that you have another property that you occupy as your primary residence on your taxes. And there's a variety of ways you can demonstrate that.
So I guess one question is that if somebody's living outside, whether it's a child or something else, and the person who's selling it forms a trust.
We're getting there.
Yeah, I know, I just read that part, okay, go over that first and then I'll.
We'll come back to it, yeah.
No problem. Give me a little more room, Todd.
You bet.
Thank you. So gift, if the property is titled, if the property title is gifted to a non-member and the donor never lived in the property but previously paid the fee when acquiring it, no additional fee will be charged. So an example would be Emily gifts the property on Elm Street to her friend Sarah. Emily never lived in the manor but paid the membership fee when she originally acquired it. Since Emily never lived in the manor and already paid the fee, Sarah will not be required to pay the membership transfer fee again upon receiving the property as a gift.
So that implies that if she had lived there and she gifted it, they would have to pay it again.
Yes.
So if she occupied it and then decided to move out and gift it to her friend, then there would be a fee.
Okay.
If it's a situation where, say, a child buys a unit for their parent, they're not gonna live there, but they purchased it, and their parent becomes basically the designated occupant, and there's no fee.
But then if the parent dies and the child then ends up living there.
So once there's a designated occupant, when
It's a
it
new
reverts back
designated.
to, then there's a fee.
So what I'm hearing is that the membership transfer fee is for a member. Somehow they have to be here using the amenities or able to use the amenities in some way.
Correct. Okay, the next one is trust. If a member transfers the property title to a trust, and the member is the main beneficiary and continues to live in the property, no additional fee will be charged. So Michael, a member of the foundation, transfers a property title of 321 Pine Street to a trust. Michael is the main beneficiary of the trust and continues to live in the manor. Since Michael is the main beneficiary and still resides in the manor, no additional membership fee will be charged. So all this person did was just transfer it into a trust. Non-natural persons. The
So-
property,
Hold on.
yes, I got it.
So if I form a trust, but the other member is not living in the property, then you don't get an exemption?
If the other person that is not living there is the sole beneficiary, you don't get exemption. But as long as the person who still lives there is the sole beneficiary, the exemption is there.
So a living trust, when you create a living trust, you don't have to pay the fee. But when the person dies and the living trust pours over to the beneficiaries, then a fee is collected?
If they move in.
If they move in.
I get the basis for it now.
Yeah,
Okay.
yeah.
If grandma and grandpa live here and they have a trust and they have Ted and Judy on the trust with them and then they pass on, can Ted and Judy, as part of the trust and the trust owns the property, can they move in without paying the fee?
If you're 55 and over and you pay the fee once you move in,
So they will have to pay the fee.
absolutely.
Is
But
that,
the key issue is whether they're living here before.
Yeah.
So if they say they were already living here before,
If you were living with your parent as a co-occupant or as a occupant on title, then you wouldn't, but you would have to be on title.
And so when you put someone on title
You better be really like them.
and they. Well, that's a whole different issue. But if you put, so I'm just thinking about some of the situations in my entry. There are people who have their adult children living with them. And it's understood that if you have your adult children living with you, when you die, then they just keep living there and there's no transfer fee. So what you're telling me is it depends on how title is held. And you could put your adult child on title while you're living there and there's no fee paid. And then when you die, because your child is already on title, no fee is paid. Am I
As
understanding that
long as
right?
they're living here
Right,
but
right.
they already,
With-
she's saying.
But
with
yeah,
your
they already
parent,
live-
then yes, there wouldn't be an additional fee.
Okay,
because
so there's
they're
not
on
a
title.
fee when you put them on title because you're still living and you're still the member.
How is this
Okay.
how is that tracked? How is that kept track?
So it's mainly tracked through member records, and as any title changes occur, it has to occur through.
So in an example, Kim just said, mom living with mom dies, the kids have been there, they don't do anything, they just keep living there. The records would never know unless they come in and say, we gotta get mom off the title.
That is between member records, the mutual, and what payments are coming in, but you're right, there's probably situations out there that need to be audited in terms of how, if somebody has passed on and then somebody continues to pay the bills and never reports and never.
Short of
That's
going
one of
through the
the-
obituaries and, I don't know how you do that.
That is
Yeah.
something that we've talked about.
But
how can
eventually-
we audit
Some of the
Eventually,
asset
when
has to be
when they
transferred
sell,
somehow, yeah.
eventually they're gonna wanna sell, but maybe 30 years down the road, if the kids are, yeah, you have to get mom off the title, that could
At
be a
some
problem.
point, when it transfers, you have
Yeah.
to capture it, but
It could be
it is a potential gap that we need to figure out.
Wouldn't the probate, I mean, when the parent died, their estate would have to be settled, wouldn't it not? And wouldn't at that point, somehow the title have to be transferred?
Not necessarily if it's. in
If
the
they
trust.
just kind of keep living and existing.
That's the point of doing the trust.
Oh, okay, okay.
Right.
That's what I was saying, where does the
Where does the
social
body
security
go?
check Where's the social
So,
security
Yeah, Ted.
Go ahead, Ted, go ahead.
So I'm 40 years old and doing really well, and I buy a place here, which I think I can do that. But I'm not old enough to live here, but I bought it for my parents to move in. And now my parents live to be 80 and I'm of age to move in. And so now, but I haven't been living here.
You pay a transfer fee.
But what if I paid it in the beginning when I bought it for my parents?
You paid it for your parents, because your parents would be the designated occupants.
Unless you held it in a trust.
Yes.
And moved in. There are ways around it and people simply don't. There are ways legally around it, but the other way around it is you simply
So-
don't report and
so-
somebody has to catch you.
So in terms of simple bypass, okay, so let's say I'm living in a property, I form a trust, a living trust. Somebody else from the outside wants to buy it. I don't do the transaction yet, I just make him part of my trust. That fee is not triggered, right?
He's not a
As long
spouse,
as they move in.
He's not a spouse.
and because they're not, unless they're a spouse, that changes everything, but if they're not a spouse, they would have to pay the transfer fee when they moved in.
when he hasn't moved in yet, so he makes a living, I make a living trust, I'm selling to you, you're outside, right?
Yeah.
I make a living trust, I make you part of my trustee, is the fee triggered or not? No,
Not until that person
I mean, you're jeopardizing your trust and putting it in somebody else's name as a beneficiary that
that's
you're
okay, we're good
selling.
friends. But the point is,
How deep out is bridge I?
Mud isn't even as thick as a dollar.
Yeah.
so, I mean, my point is that when I make him the co-trustee, it's not triggered. Now, if he moves in, is it triggered?
Yes.
How is that tracked?
Is that a new designated?
So you would have to register them through member records as a designated occupant, but then you're giving up your rights to everything.
So
If you're just making them a co-occupant, then they have no right to anything once you leave. But if they stay and it transfers to their name, then they have to pay. So if they're just living with you as a roommate, then they don't have right to the membership.
Therefore, they can't use the amenities.
But if you make them a designated occupant, then you give up your membership and have to move out.
I see. So the designated occupant is the one which would track it then, that designation. Okay.
Okay, last one?
Non-natural persons, if the property is bought by a company that can't become a member of the foundation, no fee is paid until an actual member can move in. All right, so example is ABC Corporation acquires a property at 123 Elm Street as a company. ABC Corporation cannot become a member of the foundation. However, once a designated occupant moves into the property, the fee will be paid.
And if a designated occupant never moves in, then they usually has a VRBO or whatever they use it, then the fee's never paid. In that case.
Then you have to be in compliance with the mutuals.
And then you got FUF fees, maybe and all that stuff.
Yeah, most of them don't.
Just a quick question about, somebody died in our entry, and it's been months, almost a year. I'm assuming that a flipper bought it and will fix it at some point. Do they still pay the coupon every month or for estate?
Whoever is, yes, until there's a transfer of title, whoever's on title will pay the coupon.
Or her estate?
Or exactly, or we'll take, if we need to, we'll take it out of escrow at the sale.
Okay.
Whether or not they can use the amenities.
If people can.
No, but if someone else moves in, there's,
Because the assessments are per door.
Per matter.
And is there any way we have of knowing whether people use the amenities? I mean, for example, the fitness center, you have to have a little token, right? And we track we give the token to only people who are registered somewhere.
Our system, yes, it's only given to somebody that is a registered member. If you go to play golf, you have to be on the membership list. If you want to rent a room, if you want to get a fob to get into the front gate. So there are some checks and balances. It is not built for that verification process yet.
I know a
But,
guy,
but the new system will.
Well, I mean, that is definitely when we talk about access control and monitoring, that is a direction we want to be able to go to.
and I know a guy who moved out a couple weeks ago and he said he tried to get in something that already was denied. Yeah, so it was pretty quick. So, yeah,
but it's only if there is an access control in the first place.
Right.
but that just, when his title transferred, his name got taken off and he's no longer.
Yeah, so you wouldn't be able to get the front gate unless you're on somebody's guest list.
Yeah,
that-
It happened pretty quickly.
So is it possible to get data on these exemptions, like what percentage are exempt?
So what we need, if you go back to the MTF report, down at the bottom, there's all this stuff. I just don't know which one of those
What code
numbers.
goes to which one of
That's what we
these?
need.
That's what I'll work on.
That's what-
As soon as I saw the report, I was like, we need to know how this coincides.
And then we'd like to even, if we could go back to the last couple, let's at least all of 25 and we go back to 24 to get the breakdown by
I'll see
each of
what we
those
can do.
codes
We'll see what we can
would be something great. But if you look at this, and it's pretty logical in its thinking. And of course, I think you can get, there's workarounds if you're really try and do it and stuff like that. But I think it's gonna be hard from my initial reading to go back to anyone and say, well, we should not count this one doesn't work, and we should start charging transfer fees for that. I don't see, based on this, a lot of fluff room in this to say, we're missing all this revenue that we should get.
Well,
It seems pretty good.
Right, it sounds pretty good, but let's look at the data and see if there's
Yeah, I agree.
some kind of a.
But to me, this was a great document. I don't know who put it together. It really was helpful. The examples were good. Now we just need to get the numbers. Those numbers and the numbers Todd's working on. If we had all that numbers, I think we're gonna get some good data. But I think the bottom line is, I don't think there was a bunch of money that we're missing to get on transfer fees.
So all those ones we're not collecting on, which seems like a lot, when you look at the statistics, fall under one of these categories?
That's what we need to find
Fall
out.
under one of the exemptions. That's
That's
the
what we
only,
need.
only way it could be calculated that way, is it has to fall under one of those exemptions. But keep in mind, a lot of these, once it falls into one of those exemptions, it triggers a sale from the previous property. So there is kind of a catch-up effect. Your predecessors all at this table have been through this document, and there has been committees, Mary, I don't know if you've been part, that have spent weeks and months on these exemptions and these exceptions, working with our legal counsel on, based on the law where GRF can collect a membership transfer fee, and that is a very fortunate thing that we can do. It is kind of a carve out in the law. We want to be very, very careful that we are in compliance with that. This has been scrutinized up, down, and sideways to kind of make sure.
So when and where does this exemption happen? Does the realtor know about it, or you automatically build it into the title? They have to apply for an exemption to get it? How does it happen?
So it happens at member records when, it comes through based on the circumstance of whether it's a trust, inheritance, a gift, a variety of things, who's on title, what their current membership status is. So there's kind of a checkoff list. And then if it falls into one of those categories that we've just went through and they feel like they meet that category, sometimes people will apply for an exemption. And then we review that. Sophia reviews that based on the exemptions and their documents they provide and give them a determination. Yes, you meet it, or no, you don't. If they still believe they meet it and we're interpreting it wrong, they can appeal to the board, and there's a hearing. And they can state their case there, and that happens 2 or 3 times a year. And then the board determines what their case may be.
Will it happen when the transaction or the contract is signed? It went to our member service department, and if a fee is needed, and it will be built into the title, the escrow. Okay.
This is important. I mean, I think this is great. I know I'm gonna get this to my trust beneficiary, so they know what they need to do and how all that works. So they know, I think this is good.
So I agree that this thing is logically very consistent, but it seems to be based on the premise that there's one kind of user, like designated user. But in general, the transfer fee is paid on the manner, not on the user. So if there are 2 users or 1 user, you still get to pay the MTF. I find that inherently unfair, really. And that's part of the Constitution, as I understand it, right?
So the membership is per manner. Now, there has been discussion over the years on whether you want to do a membership, a different fee structure.
Right.
Based on how many occupants there are in a unit. For example, the membership fee is 15,000 for a couple and it's
10,000 maybe, yeah.
whatever.
Yeah.
For a single. But then if somebody moves in with that, then it becomes another occupant.
Well, then it should be triggered.
Then you pay the additional fee. We went down a pretty significant path and did several presentations to the finance committee and board maybe 10 years ago on that concept. Might not have even been that long. At the time, the board it had too many complications in terms of phasing it in and how it would impact existing members and so forth, that it didn't go beyond those discussion levels.
And there is another way of looking at that $15,000 fee. I mean, it is a fee to improve the amenities and therefore preserve the value of your home. Because there's a premium paid for these houses, and the premium is because of the amenities. And so you're a homeowner and
protecting your investment.
And then you're protecting your investment. I mean, that's what it's all about. It's not about your use of it, because your use of the amenities is from the coupon, really. So if you were to differentiate it, it would probably be through the coupon that you said, oh, well, there's only one person using it here, not two. And so maybe you think about it at the coupon level. But I'm not sure how the complications would be.
There was a lot of variables such as that were debated, and it just at the time didn't proceed. There is one other element in the report in terms of we have to provide the ability for people to finance their membership transfer fees. And
James, if you look at the
I saw
the line there, says membership benefits apply to one manner. If membership separates, so if you and Maxine get divorced. Only one of you can keep the existing membership, so you don't have to pay for a new one, James. So that is addressed here.
Yeah, I saw that.
Okay. Yeah. Any other questions on this? I thought this was great.
That's very useful.
Yeah, my takeaway, and you did such a good job of explaining it, is that this is about the amenities, the fact that each manor has the opportunity to use the amenities, but as Adrian said, it's about preserving the value. And so a membership is what it's all about. Living here is how you do it.
Anything else? If not, we'll adjourn at whatever time it is, 10:42.
10:42.
Thank you.
42.
Wow.